Happy Saturday, everyone. So I want to do a video about some expectations if we're going defensive. This week, actually, the NASDAQ crossed 14,000 again, and we might actually go to new highs, which is about 14,300. For a while now, since the beginning of March, we enter correction territory, which is about 13,000, down 10% from all-time highs on the NASDAQ. And what I do is I normally trade safe stocks once we go into correction, because a lot of times the way it works out is momentum keeps going. Momentum keeps going. So since April 1st, when I went private with my elite group, I would say out of my tickers, out of my plays, at least 60% are defensive right now. 20% or so are super defensive, and some are neutral, and some are tech. So I might begin to add a little bit more tech, which is growth and tech, of course. So we're going to see what happens with that. Luckily, I believe the coast might be clear. We haven't had a day with more than down 200 points on the NASDAQ. So I'm trying to say what we want to look for is where we don't get close to 4 or 5% down in 1 week, because a lot of times speculation keeps going on. Now, I have done other videos of what you can do to go defensive, how to go defensive, but I never gave people a viewpoint of actually what happens when you buy the defensive stocks and what you would expect to get your expected outcome. Because what happens is the last 9 or 10 months up until March, we went from May 2020 to March 2021. It was a straight bull run with no corrections or nothing. Everything kept going higher. You could do no wrong. That's not expected. Now, this market is faster and quicker than ever before. I mean, we never had, I was just telling some people in the elite trading group that we never had maybe 10, 20 stocks that would go up or down 20% in one day. Now, during the dot-com bust, boom, you had a lot of tech stocks that would go up 10%. You would have some that would go up and down 20%, rare, but you would have them. But right now, we're with retail over 20%. We're seeing stocks move 30 or 40% in a day. Up 30, 40%, down 30, 40%. Now my understanding with the YouTube is I can cause a little controversy. So I could name some symbols. Before I was scared on YouTube. Why? Because on Reddit, anything that you say that a mod doesn't like or another user doesn't like, ban. So the mods are just fearful of anyone with an opinion, anyone that has something to say. It's really pathetic, but it is what it is. So here I am on YouTube, and I'm kind of new to YouTube, but now a lot of people in my elite group are saying, hey, you can stir up a little controversy on YouTube, so which is fine. So for instance, the other day there was a stock called Ortho. It's a biopharmaceutical based, I believe, in Denmark. It went from $5 to $80 during the day. It was halted over 20 times for volatility. Okay, the average volume on this stock is 30,000. Okay, and this stock particularly had close to 10 million on Thursday. 30,000 average to 10 million on that day. So $5 to $80, and it closed at 20. So what happened yesterday? Yesterday was Friday. The day after, it was down 50%, down to 10. So that's what happens with high-tech growth, speculation, and momentum. Now, it's okay to trade momentum, speculation, but my recommendation is to trade in and out in minutes. Just ride it and then ride out. So on the Ortho, O-R-T-H-O, I was actually going to buy it on Thursday when I first saw it. I was about to put an order in for $48.50. Then I was helping a customer for work. It took me about 2 or 3 minutes. 2 or 3 minutes. I was going to buy, like I said, I was going to buy at 48.50, maybe ride it for $1 and get out. That's what you want to do. You don't want to hold out on these momentum speculation. You want to just keep doing over and over again. But what I'm saying is 3 minutes later, after I finished with the customer, it's 55. Okay, I was thinking about entering an order, but every single time I entered the price, the stock was moving. So I was like, you know what? I'm going to get out of it. But back to this video. So I want to give you guys expectations because a lot of people in my elite team are worried when they buy stocks with super low PEs that aren't moving like we hope they do. Of course, I would wish that if I picked stock and I bought a stock, instantly it would just go up through the roof, go to the moon. We'd all make a lot of money. But truth be told, if every single one of my plays, the instance I bought a play or mentioned a play would go up, I would be a zillionaire. Not a millionaire, not a billionaire, a zillionaire. Why? Because what would happen is every hedge fund that has a whole bunch of money, or CEOs that have a whole bunch of money, would be calling me on my cell phone directly. Like there would be no reason for me to trade. There would be no reason for me to have ultimate traders, elite group, so that doesn't happen. So I want to give you guys some kind of expectations because I have a good, quite a few good buddies of mine. Some of them are worried. They bought something like MCFT that does recreational boats, $50,000, $60,000, $70,000 a boat. Now the thing with this stock, we've been trading for actually a few weeks, in the range from 27 to 29.50 in that range. It's a safe play. It has a very low P ratio. With the pandemic, they're actually doing more sales than normal. So something like this is pretty safe. Unfortunately, sometimes we buy at 27.50 or 27.25, and we might have to hold a few days before we sell. Now, I know with the last, with that time frame being from May 2020 to March 2021, no one wants to hold. No one wants to hold. A lot of younger traders that just got into the market after AMC and GameStop, the saga, the epic short squeeze, something that I've never seen in all my years of trading. Was that no one is used to waiting a few days. Now, I don't like it either. I don't mind waiting a few days. I don't want to hold something for more than 2 or 3 weeks. I can swing it for a week if I have to. Not that I like to. I like to trade the same day or maybe the next 2 days. But something like that, MCFT, I also have shares at 26.50 that I just bought. I've been trading it back and forth. But something like that, if you buy it on a Monday and you sell it on a Wednesday or Thursday, hey, that's okay. It was safe. We made money on it. We made greens. We go on to the next play. Now, if you're not used to that, you're not used to being what is called, I guess, the day trader from years ago. So before this all happened, with the pandemic, the commission-free trading, everyone at home, stocks flying through the roof, the Nasdaq going to 6,000, and to ultimate highs in 8 or 9 months at record speed. That is not normal. That is not normal. Can we continue to keep making money? We can, but we can't expect that to happen again. I would like to bet anyone that believes the Nasdaq is going to double again. Right now it's at 14,000. No, it's not going to double from 14 to 28,000 within 9 months. Okay, if anyone wants to bet me, fine. I would have bet before when it was down to 6,000 that we would not have hit record highs of 14,000 and above. I would have, and you would have won. I would have happily given you the money because I made a lot more trading. Trust me. But what I'm trying to say is we can't expect what happened to keep happening. While it's happening, it's great. We're still going to make a lot of trades. This past week, my buddy Kevin, a couple other traders were abusing flow. Thank you, apes, over at Wall Street Bets. What we do at Ultimate Traders, we take advantage of the opportunity. So if you guys want to believe that Clove is going to be $100, I was reading on Wall Street Bets early. I don't go to Wall Street Bets anymore. They banned me because the mods are scared of me. So someone on Wall Street Bets, all right, was asking me how do you go defensive? How do you value a stock? All right. So I responded to his question. I didn't come out there and try to say that I'm amazing, that I'm awesome, self-promote. I try to answer his question about how to do that with an answer. I got banned. What happens is Wall Street Bet mods, they're power hungry and it's abusive. It is what it is. So I read this on Wall Street Bets Elite about the Clove. And the guy had pages and pages of why Clove is worth at least, I think he said 50, and why 30 is low. Now it's 14 or 15. Listen, I apologize when I put in the comments that I did not read this whole DD, due diligence, because honestly it made no sense to me. Okay, you can put CapEx, you could do discounted cash flows. There's a lot of different ways to arrive at numbers, but what it boils down to is earnings. If you're not making money now, your company is speculative. Okay, Clove is growing at 30 to 40%. They're not going to be making money for another year. So I really feel sorry for anyone that read that whole thing and actually believes it. They're down a whole bunch in Clove. But what I'm trying to say is we took advantage of the situation with Clove. If I was behind a computer, I'd be abusing like 10 meme stocks at the same time. AMC, GameStop, BlackBerry, Bed Bath & Beyond, Course, Nokia, Clove. I'd be buying you all and riding you out. Not for a lot. No diamond hands doesn't make any sense. Diamond hand doesn't make any sense. All we should be doing is keep collecting and stacking. If it's 50 cents, $1, $2, $3, you just keep stacking. You stack up that $2, $3 over and over again, you have $40. You have $50. My buddy Kevin said this past week on the Clove, he did just as well as he did in the last month or two on Tiger. So what was that? Exploitation of opportunity. That's what I'm talking about. But going back to this video, sorry about that. I was digressing. So something, before this all happened, okay, I was still a very successful trader. But 300 to 500% is not, you cannot expect it. If it happens again, fantastic, okay? As an ultimate trader, not a good trader, not an excellent trader, as an ultimate trader on a bad year, you expect about 50%, maybe even 100%, but not more than that. Can it be done? Of course it can be done. So what would happen is, like on a Monday, we would buy the MCFT, the mess crap, or we'll buy NYMT, or buy on a Monday. And let's say we buy 450. We might not even sell it to a Thursday or Friday for 460, 10 cents. So you gotta understand the expectations here. Okay, if the Nasdaq is not making record highs, if we're gonna go defensive, because we have to protect, we have the capital preservation. So it's not always about making the most money in every trade, because you can make money on speculation all the time, but you can risk. I am risk averse. I try not to risk anything. Do I take advantage of speculation momentum? Yes, but for one trade, I go in, I go out, I take my 50 cents or $1, I get out. Boom, boom. I just keep stacking. So in normal times, like I was saying, you got to expect that you're going to buy it on Monday and sell it by Wednesday or Thursday. I was trying to tell some of my elite group, my average day, like before this, like 2-3 years ago, I'd make 2 rounds a day. Maybe 1 or 2 rounds. That means I bought today, I sell today. I bought again today, sell today. That's 2. Okay? Sometimes if things were crazy, I would do 4 rounds in a day. So the average years ago was 2 rounds, maybe 2 rounds. If things were crazy, I was doing 4. Now I got this guy on my elite group. He's doing like 30, 40 rounds in a day. He did 12 rounds yesterday, Friday, June 11, 12 rounds yesterday. He was disappointed. That's 24 trades in a day and disappointed. Come on, we can't expect that. While we do it, while it's going on, we keep going on. Okay, but we cannot expect to do 20, 30, 40, 50 rounds. When things hit the fan, if it hit the fan, because next year, inflation is real. Jay Powell said he wasn't going to raise rates in 2021, thankfully. But inflation is real. So what's going to happen? When rates rise, we might hit another correction. It might happen sooner. The only reason right now I was surprised when we're going towards correction is because earnings has been amazing. Okay, with S&P 500, this was the best earnings quarter since 2010. And this was one of the top five earnings quarters for S&P 500 ever since the numbers have been tracked, I believe over 35 years. So this was like the 3rd best quarter for S&P 500 in 35 years, and the best since 2010. So I was pretty surprised. I think we're going down. Now we're going up again. So once again, this video was expectations, not just how to go defensive, but expectations. Okay, we're not here trading Tiger, although some of us traded Tiger. And see, Tiger did great. Tiger did great. But if we're going to go defensive, those are the things we're going to buy. Those banks. We're going to buy safe stocks that have 8 to 10 P ratio. We're going to buy it on a Monday and sell it on a Wednesday or Friday. Not that I like to, but that could happen. That could happen. Okay, I mean, a lot of us are still trading Tiger and doing 3 or 4 trades a day. But we can't expect to do that if the market gets bad. So I want you guys to have a better idea of what happens in a bad market. Not just telling you what to do, but expectations. All right, have a great Saturday. Bye-bye.